Suresh Mahadevan, Managing Director and Head of Equities with UBS Securities. He joins us live. Suresh, morning. Thank you for joining us. Suresh, I guess the big question this Monday morning is that how much of the credit policy adjustment is over and how much of the adjustment is still left in the system?
See, I think, look, I mean, clearly from an economy perspective, I think growth is becoming more of a challenge than inflation. As you would have seen, I think the inflation trajectory is certainly lower. Particularly, I think the core inflation has come off significantly. I do think, having said that, I think, the RBI is worried about the current account deficit. So, very quick easing may actually not help the current account. So my sense is, and also I think the second thing is transmission of, these policy rates. If you look at the SBI prime lending rate, I think it hasn't kept pace with the last 2-3 interest rate cuts. So my sense is I think it will take some time for transmission to happen. But I think more fundamentally from a growth revival perspective, I think the government needs to play its part in terms of, I think, administrative reform, because several projects are stuck, and I think, the CCI has made a promising beginning. I hope it builds on it and clears more projects, and therefore, reviving investment sentiment. Interest rates is just part of it. But, what is the point if you're not able to get approvals, etc., then your investment is not going to happen. So I think it is critical for the government to play its part in the coming next few weeks, months, in order to revive the investment cycle. I would like to believe.
Suresh, 3 months ago, Indian markets or Indian equities were enjoying some degree of policy tailwind, but policy tailwind is missing. Parliament is not functioning. Scams are surfacing up. Do you think it's a matter of time markets will recognize the political problems?
See, I think, look, around elections, there is bound to be volatility. I think, we have been stating that. But having said that, I think, the government has certainly shown some intent earlier. And I think it is doing, I would expect some follow-up action as well. So I'm not, frankly, too worried, because this market is not trading at a very lofty multiple. And, anyway, India is very stock-specific. So certain stocks have done very well. And my sense is I'm not too worried about the politics and all this parliament not functioning. To a large extent, it is better that it functions. But I think the government can also do a lot of administrative stuff away from that, which I think the government needs to do now. Because I think what I have realized is at least there seems to be some intent in the last probably 8-9 months or so since Chidambaram took over as the finance minister. There is some strong intent by the government, which is the big delta for me. And I think if that intent is translated, it has partly translated into action in terms of some of the subsidies coming off, diesel prices being hiked, etc. But I think where we need to see more kind of action is primarily on the administrative side, I would say.
So Suresh, what is the right thing? Should one focus on money in the near term? Because clearly in the short term, Indian markets are hostage to global liquidity. And at a time when globally equities as an asset class has made a roaring comeback, do you think Indian markets will get the rub-off effect?
See, I think this year there are a couple of things which are happening, I would like to believe. One is I think Japan has become the new darling of investors. So I think quite a lot of money is flowing into Japan, because I think Japan has been a dead market for several years, and suddenly there is a lot of interest because of the easing, the currency depreciating, and Japanese stocks are up. So that is taking away some of the money from gem markets. The second is I think corporate America is in very good shape. I think it's a market which is doing quite well and attracting money as well. So my sense is a combination of this means lesser flows to gems, but I think within gem, India has done relatively well last year and even this year. So flows obviously at the end of the day follow fundamentals, and my sense is clearly if the fundamentals need to change, that is why administrative reform is important. But I think going back to your question in terms of short term, long term, it is very difficult to predict the short term reactions, as you rightly said, because we are a slave of global liquidity. Something could blow up somewhere else in the world, and as a knee-jerk, India could correct. But I think, investors, long-term equity investors, should be able to take advantage of this volatility and use it to their advantage, especially if they have a slightly longer-term time horizon. So I think, India has become increasingly a very bottom-up market. And hence, I think it makes sense to focus on stocks and, see what levels to buy them. And I think that is probably a more rewarding thing than directly predicting market movements, I would tend to believe.
What's a call on some of the cyclical names post-earnings, particularly autos, Suresh?
See, we have been generally negative consumption for the last few quarters, simply because I think, firstly, we believe that, some of the consumer names have become too expensive, number one. Second, I think, we also think that, obviously, we are saving less, but consumption has been trends have been relatively okay. But we think, probably that there is some risk because, these stocks are not cheap. So the valuation plus potentially some softening has led us to have an underweight kind of positioning on both autos and consumer names. I mean, clearly some of the consumer names have done well, and we still like ITC. Obviously, Liver did well primarily because of this Unilever trying to buy up to 75%, but that's more event-based. But generally, I think consumption is a theme which we have not been very positive on in the last few months.
Right. So, what would you recommend as far as the Unilever HUL deal is for shareholders to tender shares in the open offer? You think 600 is a good price?
See, I think longer term, I think obviously some of these companies could grow. But, it is very difficult, for us to comment on this. I mean, our analyst is still positive on Hindustan Unilever from a long-term perspective because, clearly this company seems to have turned around in the last couple of years some of their fortunes. And I think, clearly if economic growth returns, etc. But, the stock, my own sense is, as a strategist, when we look at some of the other sectors versus consumption, that is where we think, the valuations probably, tell us probably most stocks in this sector are closer to fairly valued than very undervalued.
All right, Suresh, just a second there. Keep an eye out for all the banking stocks today because there's a chunk of the market which is in the green. The only sector which is reeling under pressure is the banking space. So the Bank Nifty futures is down about nearly 1% as you just saw. And all of the index heavyweight banks are facing pressure, almost about 1.5% to 2% is the kind of cuts we're seeing there. And some of the mid-tier banking names are also at the bottom of the heap. Like I started out by saying, Andhra Bank, Union Bank, all of them. Private banks as well as public sector banks, all of them are facing pressure. So Bank of Baroda, Kotak Mahindra Bank, Punjab National Bank, Axis Bank, State Bank of India, IndusInd Bank, ICICI Bank, HDFC Bank, the 6 to 7, 8 banks on the index alone are pretty much the key top 5 to 10 losers in the session today. That's, of course, Yes Bank as well, which is down about 1.5%. Before I come and talk to you about specific calls on banks, Suresh, you track Bharti closely. How did you take to the announcement of the strategic investment coming in from Qatar Foundation?
See, it cannot be a big negative at all because, I think this deal was done at a premium. I think this transaction was done at a premium. But I think, clearly it shows that, long-term investors find value in the stock. I think, Bharti is one name we are quite comfortable with. In fact, it is in our Asia key call portfolio as well, which means it's a top 10, 15 call out of all the Asia Pac markets as well. Because, clearly this is a sector where fundamentals are turning. Pricing power is coming back. Competition is going down. With 2 failed auctions, I think the government is in a tougher spot, but to sell spectrum at a cheaper price. So my sense is the fundamentals are definitely changing in this business. Data is beginning to grow rapidly. So you should see quite a bit of re-rating in this sector And within that, obviously, Idea has done quite well from a stock price perspective as well. I think Bharti has been a laggard. So my sense is Bharti Airtel should do quite well this year.
But in the near term, does it make more sense to align with Idea, not Bharti, simply because Bharti has Africa, Idea is only standalone India. Africa is a problem for Bharti. It will be at least 3 or 4 quarters before the Africa business will turn around for them.
See, I think, part of what you have said is already played out in terms of Idea massively outperforming Bharti stock. So from that, actually, we are quite positive on the sector as such. So, we have been positive on both Bharti and Idea, though Idea has been an outperformer. My sense is, I think, if you look at the relative foreign ownership of the companies, I think Idea is, based on historical perspective, is relatively over-owned, and Bharti is relatively under-owned. My sense is if the pricing starts to manifest itself in the quarterly numbers, which it is yet to, though anecdotally we are seeing quite a bit of news flow on this pricing, my sense is Bharti should start re-rating. And clearly, I think, talking about Africa is basically worth the debt that is there in the SPV. So we are not, I don't think it's correct for anybody to attribute an equity value to Africa. I think basically we are assuming a zero equity value for Africa. And if you take that approach even, I think Bharti still looks relatively very undervalued at the current price. So taking Africa at zero and then moving on to India with pricing tailwind, I do think Bharti will make a very strong buy at this current levels.